Joining us right now for more on the market's moves this morning is Peter Boockvar. He's the CIO at the Bleakley Financial Group. And Peter, your take on what you're seeing over the last 2 days in the markets?
I think we have to understand that the U.S. economy has been resting on three pillars: upper income spending, government spending, and anything related to AI. And just as we were hoping that the manufacturing recession that's been more than 2 years now was going to come out of it, now we have obviously a global trade war that sort of freezes economic activity. Whether it's a small business that has freaked out because they can't get product overseas or now has to pay a 25% rate on that, economic activity is just coming to a halt. And I've heard that from a lot of small businesses over the last couple of days. So that then puts into question what are the earnings estimates actually going to come in this year? I would have to believe they're going to be less than what is currently estimated. And also the PE multiple. Why should we pay 20 times earnings in this economic situation? Why isn't it 15 or 16 or 17? And I think the net result is lower stock prices.
We're seeing lower stock prices. Do you think that accounts for enough of this? Do you think it's over accounting for it? Do you think it's under accounting? What's your? I mean, obviously, with a big sell-off over 2 days, the market is thinking exactly what you're thinking. How do we figure out if it's too much or not enough?
Well, I think this week we're going to get a pullback on this. I've already seen my first lawsuit filed by the New Civil Liberties Alliance, representing a retailer in Florida that's suing the Trump administration, saying that they've overstepped their boundaries and there's no emergency here. So I actually think the courts have the potential of stopping these tariffs this week. If that happens, then you're going to get a rally. But one of the things we have right now is the stock market and the economy are tied at the hip. If the stock market continues to fall, if that negatively impacts upper income consumer spending, then you're going to dramatically raise the odds of a recession, because it's happening at the same time that government spending, which, as I mentioned, has been a huge boost to economic growth, is slowing the pace of its spending. So there aren't that many stools left that the economy can sit on if we lose the stock market, if we lose upper income spending.
Peter, that's an interesting perspective, just the courts being the one to stop this. There are movements in both the House and the Senate to try and stop some of these tariffs. Several senators, Republican senators, have agreed to sign on to a bill in the Senate. It's going to be much tougher in the House to get something through. But if the courts do it, I guess that's one way for the Trump administration to kind of gracefully step back if you think they would follow what the courts say. I guess the question is, how long would it take for this to work its way through the court system?
Well, I mean, all you need is one district judge that puts an injunction on this, and that alone can stop it. What happens after that, I just don't know. But if it's emergency powers that are given to a president to implement a tariff, I think I went to law school for 1 year and then went to Wall Street. But it seems pretty obvious that this is not an emergency, and it can get quickly reversed. Obviously, we'll have to see what happens over the weekend, but I have to believe that this one lawsuit that was filed in Florida is going to be the first of many.
The reason the markets really dropped this morning, I mean, we were down 500 points on the Dow before we heard this news from China, but the China news that they're imposing 34% tariffs on all imported goods from the U.S. starting next week, that brought us to down 1,200 points now. The other question we've been trying to figure out is what other countries will do in reaction to. If you see more countries that choose to counter with their own tariffs on this, then what? How do you kind of put that into your financial calculations for where the market should be?
It's a really tough question because I don't know how to model this. We know China matched. China, we send about $150 billion worth of goods to China. A lot of that is agriculture and energy. I'm sure American farmers are not going to be happy with this because China is just going to go to Brazil or Argentina to buy their soybeans, for example. And the U.S. is going to lose a major customer. What the EU does, we'll have to see. I mean, it's extraordinarily difficult to model this out, but I think it's an obvious statement to say this is all not good for economic activity. And in terms of just freezing behavior, bottling up supply chains, and so on.